Can you imagine you could have 1.5 times your money if you had bought NIO in the last 5 days? Let's explore in this video what is going on with this stock, possible reasons why it is very volatile lately. Do you think this upswing in the stock is going to last for some time? And at the end, my perspective, if it is a good time to buy with a long-term investment horizon. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, NIO 1.5 times in 5 days. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which will be highly appreciated. In today's volatile stock market, NIO has seen a very wild ride in the past 2 weeks. Last week, its stock price went down to almost $13 a share, but by the weekend, it rose to almost 20, which is 1.5 times in 5 days. Does that mean the days of gloom and doom are over for the Chinese stocks and NIO in general? I'm afraid the answer is not that easy. In the backdrop of immense demand for EVs in the world, no doubt China has emerged as the fastest growing market for such electric vehicles. Don't get me wrong, in spite of all the demand in the world, there are many other external factors that are affecting NIO in particular while stock market in general. We all understand that price of a stock is not merely dictated by the underlying fundamentals of the business. Rather, there are other external factors that can have an overarching effect on the stock price. The biggest drag on the Chinese listed companies is the news that Russia might have asked for China's help in their war in Ukraine. Since Russia is now under extreme financial sanctions which are imposed by the West, under the circumstances, if China comes to its rescue, which means it is opposing what the West is trying to do, which is to put cost onto Russia for its aggressive behavior. In case of such eventuality, China might have to face secondary financial sanctions from the West. As a result, its stocks had a huge sell off. On Friday, President Joe Biden told China in no uncertain terms that it might have to face huge financial costs in case it helps Russia in any material way, and now it is clearly evident that China wants to avoid any sanctions from the West. It being an export oriented economy where its trade with the US and Europe is close to $1.5 trillion combined, as expected, China took a little softer approach as it does not want to get embroiled in this conflict. As a result, the Chinese stocks rallied and so does the Hong Kong stock market. The delisting of Chinese companies from American stock exchanges is a real risk until they comply with SEC's listing requirements. Even though NIO was not amongst those first ones on the SEC's delisting plans for NYSE, but it is safe to say it is still not out of the woods. There are some signals coming from Chinese government that it might be trying to cooperate with US regulators to create more stability for overseas listings. In my limited wisdom, there are delisting risks, geopolitical uncertainty, and some other factors that nobody is aware of, but NIO has got their secondary listings on Hong Kong Stock Exchange recently just in case. It planned push into wider European markets starting with Norway this year, which could be the catalyst that everybody was hoping for so that its stock could recover from its 52-week lows. Stock investing has got two components. First is based on the fundamentals of the underlying asset, and second, more important, is the human emotions behind investing. If you just look at the optics of what is going on with NIO and other Chinese stocks, where they have yet to comply with SEC's listing requirements about getting their finances audited to check for authenticity, while on the other hand, possible sanctions against China if it materially supports Russia in any way. What do you think the human mind is thinking? In my limited wisdom, if you are a new investor, you don't even want to touch the stock with a 10 feet pole right now. Now, does that mean it is all gloom and doom for the company? I'm afraid the answer is very complicated. There are many external geopolitical issues that can affect Chinese stocks, which are very hard to predict right now. As a matter of fact, Why would you put your hard earned money in any investment if you were not able to completely wrap your head around the risks that comes with it? But on the other hand, there could be a chance to make serious money if you are able to digest those risks. As a matter of fact, I do own NIO, which is the only Chinese company in my portfolio, but based on my risk reward ratio, I'm not comfortable adding more onto my position. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.